Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm here with a Stansberry panel. We've got Brian Tycangco from the Philippines and Kim Iskyan joining us from Singapore to talk about why now is a good time to look at investing in emerging markets. First of all, Kim, can you maybe define what is an emerging market?
Jessica, I think I would start by excluding the United States and Western Europe and what's left. A lot of the rest of the world is defined as an emerging market. It's everything from China to Chile and a lot of markets in between there, including India, Russia, South Africa, Brazil. There are a couple of markets that don't really belong, like South Korea and Taiwan. They're, for whatever reason, still categorized as emerging markets. And then there's a handful of markets that don't quite make the cut. They're frontier markets, but they're really pretty small. And they're like pocket change.
So, Brian, you and I have talked, as Kim and I have, about the importance of looking at emerging markets right now as a vehicle to make some money. What's your case for that?
Their economies are growing typically faster than the rest of the world or the developed world. They have better demographics. So you have a big growing base of consumers. Right now, particularly for emerging markets, what's particularly appealing about these group of markets is that they are going to be benefiting from this quantitative easing on steroids that we have right now going on in the US.
Why do emerging markets benefit when the Fed pumps dollars and liquidity into the market?
Well, I think there are two dynamics there. One dynamic is that with all that liquidity sloshing around, investors are looking for risk. And emerging markets are certainly regarded as higher risk and often higher return. The other side of it, though, is dollar weakness. And historically, when the US dollar is weak, emerging markets tend to benefit. And there are a few reasons for that. One of them is that foreign denominated debt becomes easier for countries and corporates in emerging markets to pay off because their own currency goes farther. So it's easier for them to pay it off. So margins expand.
Kim, you mentioned risk, and I guess I want to get both of your takes. This is higher risk for more reward type of investing. So what should people keep in mind? What are some strategies, Brian, to mitigate that risk?
Most of Americans, their easiest way to invest in emerging markets are to invest in ETFs. I mean, they give investors both the upside of the broadest set of equities for these particular markets. And by investing indirectly in these markets through the ETFs, as their currencies rise, so does the value of the ETF itself. It's sort of like a win-win when you're riding this wave. Obviously, the downside to that is when the trend reverses, then you got to be able to get out really fast.
The comparisons that we've seen recently to the run up to the 1999 dot-com bubble sort of bring to bear the Asian crisis and the collapse of those currencies. Could that happen again? And how do we mitigate against that if that's a realistic risk this time around?
Seeing what we've gone through the past several months, it's difficult to write off any risk. So yeah, that is certainly a possibility, but I don't think that we're really seeing that. What we are seeing is a lot of economic contraction, obviously across the world. And there are some currencies that have been quite weak, but I don't think that we're going to be looking at an across-the-board currency collapse, just because the macroeconomic fundamentals of a lot of these big emerging markets are quite strong. I think that the other risk that we haven't really talked about is certainly on the corporate level, on the stock level, because levels of transparency are much lower. There's a whole lot of monkey business that can go on that happens in the US too, but it's a whole lot more easy for American investors to get ripped off if it's happening halfway around the world in a different currency and a different language. But a way to mitigate that sort of risk is to invest in ETFs, as Brian suggested there. You're getting a basket of stocks.
Now, you guys both like countries in that basket that start with the letter I. Countries that we don't hear about as much. When I hear emerging markets, I think Southeast Asia, I think maybe China, but you have a country that sort of is more South Asia that you want to recommend people think about, Kim?
Yeah, I think that India is quite interesting at this point. India is kind of like the other big emerging market that you don't hear that much about compared to China. And India actually has almost as many people as China. It's enormous. It's incredibly diverse. The stock market It's bifurcated in a funny sort of way. The large caps have massively outperformed the small caps, and valuations for those small caps are really quite attractive at this point compared to history as well as to other emerging markets. Also, a lot of people who look at emerging markets don't like India just because the politics have gotten quite sticky. The prime minister has done a lot of unpopular things, and right now the country is kind of staring a pretty big corona crisis in the face.
What's your case for Indonesia, Brian Tycangco?
Okay. I live in an emerging market myself. I live in the Philippines, and I can, speaking from experience, tell you that the economies of Indonesia, and the Philippines are somewhat related. But Indonesia is basically a natural resource economy. And that has actually protected it and actually made it stronger during times of a weak dollar, wherein demand for their exports, their income increases as their currency increases against the dollar. They have a huge middle class of more than 45 million and growing consumer base, and its e-commerce industry is growing like wildfire. So you have real pockets of growth in this emerging market, great demographics, great debt to GDP ratios. You have spending power on tap. So it just gives you an idea of the upside in Indonesia.
All right. Thanks so much for joining me, gentlemen. Brian Tycangco there from True Wealth Opportunities China, and Kim Iskyan, our international editor, both joining us from abroad for their perspective on investing in emerging markets. And if you would like to see much more content just like this, please do subscribe to our YouTube channel. You can also find us on Instagram, on Facebook, and on Twitter. That's all for now. Thanks for watching.